What's up, guys? It's September 18th, 2023. We're going to do the E-mini breakdown. We're going to start with yesterday's context, where we are in the market cycle, the first 6 bars and how they tell us what the day can be, where the buyers, sellers are, and what patterns we have to trade today. Starting off with yesterday's context, it was a big downtrend. Bears got a gap down, big gap down, and pretty much it was sell. Bulls had a pullback and then sell off again, making new lows pretty late in the day. About like right after midday, they made a new low, and then the market ranged. That's important that we understand the market ranged. Here is the range. If you guys can see that, the range kind of spilled over into today. Yeah, that's yesterday's context. Go over the market cycle now. Just a quick bigger time frame picture. You guys remember the last video, we are in a range. And I was talking about the scenarios from the video of yesterday's breakdown. And I didn't want to give anyone a bear biasness because of this downtrend, because in a range, these things fail and we can go back up. Maybe, let me do this one more time. Maybe we fake out the bulls. Like, I'm trying my best to not give anyone a biasness, just to see the markets for a little bit more clearly. I'm not gonna say for what they are, because that's a hard thing to do. It takes years to learn what they are. So here's the bigger time frame range. It's still with a 5-minute chart. I just squished it. We had the failed breakout here by the bulls, and then a failed breakout by the bears. The bulls still have this entire gap open. So this is kind of bullish pressure. Do you see this gap? This is still open by the bulls, so this is all bull pressure. And then we have a gap open by the bears. Bigger time frame range. I'm gonna delete this one. Delete that. Delete this. See? These gaps signify pressure from both sides. So here's the sell zone, bigger sell zone, and here's the gap the bulls have, and we're just consolidating within that. Here is the 1 hour the 1 hour time frame, a little bit easier to see now. Here's that first zone. See that gap right here? That gap I was talking about. And then here's that bull gap. And we can kind of see that bulls got a double bottom at the bottom of the range. Double bottom right here by the bulls, higher low double bottom. We're trading under the EMA, so this could be seen as a bear flag, but we'll have to see. This is not good follow through. Bears would want to see a big bar that smashes through right away. 3 bars in a row can signify pressure picking up. So if 3 bars in a row signify pressure picking up, why are we not selling? Maybe because we're at the low of a range right now. We have FOMC on Wednesday, so that could be a breakout trade. I mean, not like a breakout trade, but like a crazy bar that goes like this or like that, or just something that tests both sides of the range. Let me delete these so it doesn't get too crazy. I hope that wasn't too confusing about the gaps. These gaps are not traditional gaps. These gaps are traditional gaps, but these gaps that I'm talking about from the bottom of this to the top of this is an Al Brooks gap. So definitely look into Al Brooks and what he does online if you guys want to learn more about what I'm talking about. He is the price action authority. It is worth it to check him out. This is today. So that's where we are in the market cycle. Now we break down today. So today, here's the trap. Bears get trapped pretty quick into the, let me lock this grid. If you guys can see this grid, it is 10-point increments from here to here. It's 10 points, 10 points, 10 points, 10 points. So we can count real quick, 10, 20. Bulls fail about a point below. 1 point at the 20 mark. You see how it makes it really easy to count. They make about 5 points down here, and then 10, and then almost 20. So that's why I have the lines there, because that's minor support, minor resistance and minor support within ES. First 6 bars of the day. We have a bull bar. It was a small gap down, and bulls close the gap, and then we push up and create a micro double top. Double top, double bottom, that's hallmark for a range. Breakout mode. The trap begins right here for the bears. We see this resistance, support by the bulls put in on yesterday. Bulls put in support. That's the low. Maybe they test a little bit of it. And then bears try and go for another move down. You know, they see a downtrend. They want day 2 continuation. And we can see some force with this selling. But look at this close. Do they even make 2 points? So they close a 1 point body. They maybe scalp up 2 points with a market order. You drop a point. So that's about 2 points. They do get 2 points. But the wicks, we have wicks right here. That's not good. We have a strong buy bar for bar 1. This is a strong bar, so that's not good for the bears, because to the left would be people would lace this bar with buy orders. So that's not good for the bears in this case, because they're selling. Yeah, I mean, they in a scenario is they break through and that's what they want, but the wicks show us that's not what they're getting. So the buy orders pick up, and this is a failed breakout. Also, a bear trap. Bears got trapped today because they had a great downtrend, and I think everyone and their moms wanted to go short right here. I wanted to go short right there. I hit out very quickly because bears could not close at the 5 point mark. This is 5 points from here to here. It's 5 points, and they could not close, so I got out. That's a failed breakout. So the first 6 bars of the day are rangy. Bulls are buying lows, bears are shorting highs. But there is more bullish pressure. These 2 bars are the only 2 bars we've had in 30 minutes. This is a neutral body. Bull, neutral, bear, bear, bull, bull. You could say we're range bound or a little bit bullish. And that would tell me, okay, maybe it's a buy low day, maybe sell highs depending on how the day unfolds. But this is not this is not a trending open. A trending open would have 2 gaps off the rip, like this. See? 2 gaps. They kept this gap open, and they kept this gap open. Very quickly, they put that in. We don't have that here. We have a trending range open. So, it's buy low, sell high. First 6 bars of the day. Now we're going to break the day down and talk about buyers and sellers. So the first 6 bars of the day give us the clue to what we can expect for the rest of the day. Range open, and we ranged. Look, the market went up here, the market goes up here, the market went down, the market goes down, and we kind of close on the EMA. That's not to say like the opening pattern will always project the day. It's just to say, okay, trading range open, maybe we range, maybe we sold off and then range like this. I don't know, but I'm just thinking more rangy. Not yet. It's not a breakout yet. So buyers and sellers. Since we're ranging, it's buy low, sell high. This is Al Brooks terminology. Buy low, sell high, and scalp. That's what we do in ranges. Buy low, sell high, and scalp. We buy at the bottom of the range and we sell at the top of the range. So let's go. Bears get a failed breakout. I think there are more sellers here because of the range put in yesterday. And we can see that with these wicks. There's lots of wicks here. Lots of wicks. Just make that a little bit lighter. This isn't like an accurate box. I'm just trying to highlight where my eyes are looking right now. make it accurate. Maybe it's like this, maybe like that. We could put it to the top, something like that. The point is, I want you guys to see these wicks. So sellers at highs, buyers at lows. We see all these wicks at the lows showing buying, steady buying. Bears are not shorting lows. Even though they're selling highs, they're not able to put any bodies below the bar. So this is already telling you something's changed within the markets. We're not trending lower like people want from yesterday. Bears cannot close below. So sellers at highs, bulls below. They're buying the EMA and bulls start to buy above bars. The bulls are buying above bars and they're closing strong bodies here. We get a little buy the close rally. When we push up for a first leg here, we get the leg one, buyers, pause. Doji, we can expect a couple more legs up, and that's what we get. We get one more leg, a very weak leg two. Leg two is not strong, but we can see the pullback, and that makes a leg three. Third legs fail in a range, and look what we get. We get a top. We get a market top right here. Third legs fail in a range, and bulls cannot continue the bullish structure of new highs. So now we went from a bull trend by the close, 3 legs, and a failed breakout. And look, they come up and test the zone one more time. And they can't breach the new high. They can't make a new high. So now sellers are taking over at range highs. I suspect there are more sellers now looking at this bar. They are looking at these bars, wanting to sell. I think there are more sell orders laced than buy orders. And that gives the bears a second leg down. This creates a triple top lower high. I think this is a inverse head and shoulders. The point of the head and shoulders is a lower high. Oh no, higher low, and then a lower high, which is bearish. That's bearish structure with a bearish tone. We are also trading below the 1 hour EMA. Yeah, so since we're below the 1 hour EMA, this is also bearish. Okay, we should be alert for bull setups. I didn't mean to delete that, but you guys saw it. That's the 1 hour EMA plotted on the 5-minute chart. And then bears go for their legs. Bears get one. I actually got a little confused counting these legs. So bears get 1 leg, 2 leg, and instead of buy low, sell high, the market transitions and they get a vacuum test to the last balance zone. A balance zone is just another name for a range. My mentor, she uses balance zone, so I'm trying to copy her vocabulary. So this would be a balance. This would be a balance zone, and this would be a balance zone. This is fair price, building off yesterday's video. This is a fair price value, fair price zone, balance zone. This is the discrepancies. We move up, okay. Price is overpriced. We move back down, okay. We check it. And look, we close in the middle of these 2 balance zones. Wow, range day, we agree on the price, we close in the middle. The whole day's range is right here. Or, excuse me, that's not it. So, we shot up, test, shot down. Here we can see bull flag 1, bull flag 2, and a breakout. Here we see bear flag 1, bear flag 2, and a breakout. So, price action is fractal. It's just very hard to it is very hard to read. These 10-point lines are really starting to help me out in terms of looking at the market from a consistent way, because now I can see who's making money where, when. I'm not saying I'm going to be profitable off the rip, but now that I can look at it from a consistent view, I can start to make consistent plays, if that makes sense. This is the first time I was able to just hit out. Oh, they're not making 5 points. Get out. Failed breakout. Swap. So the 10-point increments help a lot. And ES moves within 10 points. Hedge fund managers know this. And if you're going to trade ES, it's important to understand that. That's the buyers and sellers. And we kind of dribbled into the patterns. I'll just go over some of the patterns real quick. Just to have it defined in everyone's head. To the patterns. The patterns we have today here. Failed breakout. That's a reversal pattern. head and shoulders. And we get miniature bull flags. These are tough bull flags, but they're bull flags. And let me show you. Here's one bull flag. You might not see it yet, but remember a triangle has 5 pushes total. Oop. 1, 2, 3, 4. Oops. Here we go. 1, 2, 3, 4, 5. That's a flag. Get long. 2-bar reversal. Next pattern. Another form of a flag. A little bit harder to read. We go up. Jeez. Then we come down here. And this is a double bottom flag. Okay? The double bottom's actually here, but this is a bull bot. I'm going by the closes. And we break out. We make a strong pull. And here's another flag. This doji, first reversal. I bought this close, and I thought we were gonna go for leg 1, leg 2, but it failed. The second leg really sucked. I mean, they got 50% of it, but here's another bull flag. The longer the trend goes, the weaker these flags are getting, if you notice within a range. So you guys see this bull flag, and then we make another bull flag here with a double bottom. And this is a good buy. I mean, you could scalp out to the high, which is what you're supposed to do. I'm not holding until I see a strong close above this 10-point level, and they never got that. So you get out. Inside bar at range. This is the inside bar, outside bar, inside bar at resistance. This is a reversal pattern, and look, it reversed within a range. So here, bulls get their failed breakout, and now we start to move down. 1 leg, 2 leg, 3 leg, and a fail. Bulls get a 2-legged pullback, 1-legged two-leg pullback, and the short takes off. There we go. Here are the bear flags. 1 bear flag, 2 bear flag. And I actually expected this to reverse. I got long, and as soon as I seen this close, I was like, oh no, I gotta get out. Bears are going for their 5-point. And they got their 5-point, and they got a little bit more. But they never got the 20. They never got the 20-point. Bulls start to put a double bottom in, and we close at the halfway point of the day. So today was a profitable day if you were a bull or a bear. It was a range day. Both sides had a failed breakout, offered great entries. My trading is going to be going towards point counting 10-point increments and patterns like this, leg 1, leg 2. They had a failed breakout like here, 1, 2, and 3. See? Okay, the pattern fails. Reverse. So things are going to work out. I hope you guys are learning things and studying. Please study outside of these videos. If you guys learned something, don't forget to hit the follow button. Have a good day.